Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Cucchiara, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Cucchiara.
Welcome in. Good afternoon. Joe Cucchiara with Real Estate Radio Live, and Happy New Year to all those. You've probably noticed. I hope you noticed. Anyway, we took a little time off from the podcasting and just had a couple of podcasts run over the last 2 weeks, but we are back in full swing now. So again, Happy New Year to all. I hope everyone had a safe, enjoyable Christmas, holiday, New Year, and ready to go in 2019. So our commitment as we get kicked off here in 2019 is to be even more proactive with the material, information, guests, content we provide to you, our listenership that continues to grow. So thank you very much, first of all, for the people that follow us on Facebook on that feed. We appreciate that very much. We want to continue to grow the show and expose the show to as many people as we can. This is a podcast. We want to try to reach out and get as many people as we can to listen to the show, pass it along, and hopefully benefit from. So you could download the podcast if you haven't already done so. You just go to iTunes, type in Real Estate Radio Live. You go to Stitcher, Google+, any of those places. You could also go to our website, which is 𝗪radiolive.com. That's 𝗪radiolive.com. You get the podcast there as well. Try to stick to a schedule about 3 days a week if we can. They mix up every once in a while. But, again, for those that follow us on Facebook, Mondays at 11, Tuesdays, Wednesdays, Thursdays, we try to go right around 3 o'clock Pacific Standard Time. We have a lot of good material, new material coming out. I'm excited to share, and starting in the next couple of weeks, more focused on the products and service in the real estate and lending business that are really changing and switching these days. So we're excited about. We're going to be making some announcements over the next couple of weeks, so stay tuned for that. What I want to do today, however, is really kind of kick off 2019 with some good news, and that is, so two things I want to talk about today. Rates dropped, and they were dropped quite a bit. There's been so much. I'm thinking that a lot of people just missed the fact that rates have come down the last several weeks because of a couple different things. One, the stock market's been beat up a little bit. The stock market's kind of been a roller coaster lately, and that's been taking people's mind off a lot of things. And, of course, there's the Christmas holidays, New Year's, a lot of stuff going on. A lot of people like to disconnect, and I don't blame you at all, and unplug and have a little real life time and relax with your friends, families, and et cetera during the holidays. So I think that my take is a lot of people miss the fact that rates have came down. So I want to talk a little bit about this, and the reason why is that rates have gone up quite a bit over the last year or so. And most people know that. I've been talking about this for a while. And that was one of the concerns of a lot of buyers. I'm going to talk about that in the second segment of the show, too, on how buyers, I really want to see you get out there and make it happen here in the first quarter of 2019. It's a great time. But let's stay focused here, the first segment, on rates. So over the last 2 or 3 weeks, again, kind of quietly behind the scenes, rates have come down. And, again, I think a lot of people have missed it. So I want to put the alert out. I want to warn everybody. I sent a video out today to my database and my contacts to give everybody an update. So it's real simple. If you have an interest rate at about 4.5% or more on a 30-year fix, you really need to call me, and we need to take a look at that because rates have come down. Now, the thing that's really glaring that's been exciting for people in the Bay Area with larger loans, jumbo financing has come down drastically in the last. Jumbo financing has come down even more than conforming financing. Well, again, I know for some people that are confused by that, jumbo financing is anything over $670,000, $680,000 plus. However, it's a little tricky because we could still get you jumbo financing at some of the lower rate limits, the loan limits. So what I'll just say is to make it simple as possible. It doesn't matter what the loan amount is. If you have a loan, if you have a rate that's 4.5% or higher, you really should call me and take a look at that if you're going to be in this property for a while. The reason why rates have come down. If you have a jumbo rate, now jumbo rates have been in the high fours for quite some time. And jumbo rates have really come down. So if you have a loan amount at, say, $680,000, $700,000 or more, you could really, really benefit on a 30-year money. Now it's closer to 4% or so, depending on, loan to value, credit scores, a lot of those things. I'm helping some clients this week, getting to some no point, no fee loans and dropping their payments several $100s a month because rates have came down. So if you have a jumbo loan, if you have financing a loan on any of your properties that are, say $680,000, $700,000 or more, give me a call, check in, shoot me an email. Let's take a quick look at it. I can help you save yourself a lot of money, especially if you're going to own that property for a while. And that's 30-year money, folks. So if you are one of these people that likes the ARM products, the adjustable rate mortgages, and a lot of people do like these because maybe you're not going to be in this house for 4 or 5 years, maybe you're going to sell it in 7 years or 10 years. The jumbo ARM products, depending again on your credit score, loan to value, don't get me wrong, these aren't rate quotes. These are updates and alerts to get you to give me a call so we could run some scenarios for you. But we are getting the 5-1, 7-1 ARMs. We're getting the adjustable mortgage fixed 5-1s and 7-1s into the mid-3 range, 3.5, 3 5/8. That is a really, really good cost of money when you're back down now to 3.5 and 3 5/8 on ARM products, adjustable mortgages. And those work for some people because, again, you may not be in the house for 5 years plus. You might want to sell it. For sure you're going to do something else with it. So there's some options. The point that I want to make really in this segment again, I can't stress enough, this is a window that just opened. I don't know how long it's going to be open. Honestly, I don't. My guess is this is not going to be open very long because rates are still going to have a tendency to go up, I think, this year a little bit. So this is this window of opportunity. A lot of it has been driven by the stock market getting beaten up so badly. A lot of times what happens is stocks and bonds compete. And so what I mean for that is a lot of times when the stock market has a rough go, what happens is that it's a flight to safety. So a lot of people will invest to move money into bonds. So bonds tend to rally, interest rates tend to improve. It's not always the case, but this happens quite a bit. So the fact that the stock market has gotten beaten up pretty bad over the last several months, the beneficiary of this is the interest rates. The interest rates have improved. I don't know that they're going to last very long, though, and I don't think they're going to go much lower. So here is my take, and here is my recommendation to you out there as you're listening to this today. Pass this on to friends, coworkers, family members, anyone that could benefit by an improved interest rate and saving money. Why would you, I say this all the time, why would you want to give a lender an extra $200 or $300 a month rather than put it in your pocket or save it or invest it or put extra towards the payment? Just don't do it. And for those people that are worried like, Joe, I just refinanced a year ago, that's okay. We could run those numbers. That's easy to do. Figure out what you paid so far, how much interest, how much principal, does it make sense? Here is what I'm recommending to most people that refinanced in the last 2 years or purchased in the last 2 years. Let's look at more of a no point, no fee loan. That's the way to go on something like this, so you're not paying a bunch of closing costs again, even though the rate might be a tiny bit higher and you're still saving several $100s a month. Just as this week kicked off, we're only Tuesday. I've got 4 or 5 clients already that I'm saving somewhere between $350 and $400 a month on dropping their interest rate at no points and no fees. So I want to just make sure I get this message out because I'm a big fan, as you know, of education information, and I want to make sure I could save you money and put you in the right loan program if it makes sense for you. So kind of a quick summary, rates dropped. Take advantage of this opportunity. Give me a call. You know how to reach me. If you don't, 408-838-9060. Let's run a scenario. Email me, joe@reradiolive.com. You know what the website is. You can go to the website and email me from there. Give me a call, email, text, either one. Let's help you get situated here. And there's a lot of people I know that last year were paying in the high 4% and sometimes right in the 5% range because rates had gone up. They're back down, and there's a big, big opportunity for you. And again, the last thing I'll say is I believe this is a window of opportunity, which means if you're going to do something, do it now within the next couple of weeks and get it started. I really don't see these rates staying low like they've dropped in the last couple of weeks, I do see them coming back up anywhere from 3/8 to a half in rate over the next couple of months. So I would jump on it, and I would act on it as soon as possible. Reach out, let's run the numbers. And again, this doesn't matter if it's a primary residence, second home, investment property, makes no difference. You could save on any of those. All right. And if you just purchased, don't worry about it. Some might be thinking, Joe, just 3 months ago I made a purchase and I paid 4 7/8. That's fine. We could still help you. We could drop that rate even better if you just did it. But we'll look at a no point, no cost for those people because those make sense. They make a lot of sense when you just did some financing. So regardless of if you just did this, you just purchased, you just refinanced, it doesn't matter. Again, it doesn't cost you anything for us to run a scenario. I could look at them side by side for you. We could get on the phone. I could send you some information and see what we could do to help you out with those. Now, also, if you think you're going to be selling your home sometime soon, it's another reason to maybe look at the loan program and look at it differently and see what you want to do. Again, I just sent a video out, and I want to kind of repeat what the video said today, and I've already got a lot of response from hundreds of people from this video. And that is the reason you want to look at refinancing or looking at your financing now. Number one, rates have dropped, like I just explained, so take advantage of that if you can. Number two, a lot of people over the last couple of years, last several years, have gotten home equity line of credits, HELOCs they're referred to. Second loans on their properties for various reasons. And most people have been hesitant to refinance or consolidate the first and second because the rates are so much higher. But this is a great time. If you have a home equity line of credit, this is a great time to look at consolidating those, bringing them together as a first and second into one loan. It really is because of this window of opportunity that was rates on the first. I've got a lot of clients and a lot of people that will say, gee, I don't really want to consolidate to first and second, Joe, because I have this interest rate of, fixed for 4% on my first loan, or 3 7/8, or some great rate, which is true. But don't kid yourself. I've done this scenario before. There's something called blended rates you have to be really careful with. If you have a $300,000, $400,000 loan and it's at 3 7/8 on your first fixed for 30 years, and then let's say you have a $200,000 equity line of credit that you did some remodeling with, and that rate's now at 7 or 7.5%. Those blended rates don't make sense, especially if you're not going to pay that home equity line off for a while. So you'd be surprised to know and to understand, and I run the numbers of you are going to be potentially better off in that example I just used by consolidating the first and second and actually ended up with a little higher interest rate than you do have in your first right now. Think about it. If you have a 3.875 on your first, depending on the loan amount, and you have a 7.5% adjustable interest only on your second, those blended rates are very high. And if you could wrap all that money together, say for 4, 4 1/8, 4 1/4 at no points, no fees or something like that, believe me, when you look at the numbers, you might be surprised, maybe you won't be surprised. It is oftentimes a better way to go is consolidate that first and second. Again, a lot of people are misled, or they think, Joe, I don't want to do this because my payment's so low on the second. Well, yeah, because it's a false payment. Be careful of that. On the home equity lines of credit, be really careful. Remember, that's a false payment when you're making interest only, and it's like a credit card. If you never pay the principal, you're never going to pay that loan off. So be careful of that, number one. And number two, the last thing I'll say about the home equity lines of credit is most of them are, they have a 10-year term. And that 10 years goes by pretty fast. So for those people that have had home equity lines for, let's say, the last 6, 7, 8 years, even more reason to jump on this and do this now. You don't want to have that 10-year term come up on the home equity lines. Let me tell you why. When the 10-year term comes up on those home equity lines, a lot of people forget the fine print and they forget about this. They do what's called a recast. So I'm just going to give you a quick scenario on this. If you have a $200,000 balance on your home equity line, and let's say, your interest-only payment is really reasonable right now because it hasn't adjusted or changed, and it's, maybe $300 or $400 a month, okay? If that 10-year period hits without you knowing or thinking about it, that loan, what happens after 10 years, it does what's called a recast. So it recasts amortized based on a 30-year fix, and you've already had it for 10 years. what it does, ladies and gentlemen, is it recasts to a 20-year fixed principal and interest loan. That's right. So you exit the interest-only loan for 10 years, and now you're put into a recasted program of an amortized 20-year principal and interest loan. And that could take your payment in this scenario. Let's say you have a $400 to $450 interest-only payment. That alone right there could triple your payment overnight. You could have $1,100-$1,200 payment all of a sudden if that loan recasts to the 20-year amortized principal and interest. So these are a lot of things people don't know and they don't understand, and that's part of my job to educate and inform you on these things. So last thing is, on a refinance, a great time if you want to remodel, if you want to add on, if you want to pay debt. Sometimes it's expensive debt. I know a lot of people don't like to talk about it because they're embarrassed, but please don't let that stop you from making wise decisions financially. If you have credit card debt and you have, $20, $30, $40, $50,000 in credit card debt, I see it all the time, and people are ashamed, or they think, God, Joe, don't worry about it. This is not a judgment. This is not about judgment. This is about getting your financial life in shape. So if you have $20, $30, $40, $50,000 in credit card debt and you're paying 18, 20, 25% interest, that's not good. That's not taxable interest. That's not, I should say, tax-deductible interest. Those are also a good opportunity to refinance, consolidate, pay off that debt. As it is for student loans sometimes, depending on those, the way they're structured. And then again, if it's a great time to remodel, add on. And then the other piece here that I'm seeing a lot of people take advantage of is accessory dwelling units. So ADUs, you'll hear that a lot, accessory dwelling units. What that is the state of California are huge advocates right now because of the housing shortage. And they're, for the first time in years, advocating that people build separate independent units on their property. And this is going on all in California. I'm doing one myself. It's a great opportunity to reinvest in your property and bring the value up even more. Add another unit on your property. I know it sounds crazy, but the city, they're very, very liberal in working with you right now with these. They really are. So these are some of the things, these are some of the reasons why you want to take advantage of the refinance, take advantage of the market when it is like it is today. Rates are down. Take advantage of it. These are just a handful of reasons why you should. And the single biggest reason, of course, is to save money and put that money back in your pocket and invest it for yourself instead of someone else. All right, so here's what we're going to do. I'm going to switch gears a little bit now, and I'm going to talk about buyers. So it kind of goes hand in hand. The first segment here, the first part of the podcast, I wanted to really give people an update and send the alert out that the rates are down. Take advantage of it. Act on it now if you can, if it makes sense. Give me a call. Second thing I'm going to talk about here now on the podcast is buyers. It's buyer's time. It really is. You heard me say this right before the end of the year. It's still a buyer's market. Some people might argue. Some people might say, well, Joe, it depends on the area. I don't really care. I have my own opinion. I study this stuff every day. I report on it every day. And some of it's people's opinions, which you have to be careful about. Some of it's people's emotions, which you have to be careful about. You don't want to make decisions on emotions unless you have looked at the numbers non-emotionally as well. So what I mean by that is, for the last 3 or 4 years, you've heard me talk about this. It's been a tough market for buyers. Buyers have been beat up. Sellers have had this wonderful run. The market has changed. It's more of a normal market now. And there's opportunities out there. What I don't want to see is 6, 7 months from now or a year from now, if the market turns and it becomes a seller's market again and the inventory goes back down low, I'd hate to see all those buyers getting outbid and having a tough time in the marketplace. So this is the thing I want to talk about today on the second part of this podcast. That is, take advantage of the low interest rates. If you are one of those people that were on the fence and you tried to buy last year or the year before and you were frustrated and you wanted to get out of it and you were tired of it and you wanted to give yourself a break, I don't blame you. But seriously, if you want to be a homeowner, if you want the home ownership dream, if you want to move up, now is a great time to buy. Now, someone might say, Joe, no, because it's a flat market. The market's changed. I think we should wait for a while because what if the prices come down even more? Well, that's true, but what if they don't? And here's my response to that. If someone says that, I'd say it's still the best time to buy. The reason why is rates are good. Okay, that's the big thing. Secondly, you don't have to pay what they're asking. Remember that. If someone's asking $1 million and the house is sitting there for 6 months and they haven't got any offers, or you don't know what the offers, then offer them $900, offer them $950, offer them $925, offer them $875. The point here is there's no rule against making an offer based on what you feel. And if you're working with a real estate agent that says, be careful, we don't want to embarrass them or upset them, that's a bunch of BS. I would have that conversation with anybody any day. Seriously. If someone is going to get emotional or going to use it against you because you're going to make an offer, a lowball offer, or whatever they look at it, so what? It's a house. If they don't like your offer, then they kindly don't accept it. Hey, thanks for your offer, Joe, but that's not the price we're looking for. If you want to come up, we'll entertain another offer. Otherwise, have a nice day. You know, this stuff about we don't want to embarrass someone or upset someone on an offer, that's ridiculous. I mean, I've been in real estate for years and financing for years, and, you know, do what's right for you. If it's laughable, then the person laughs, right? If you have a home on the market for $1 million and everybody knows it's worth $1 million and someone offers you $800, why be embarrassed by it or why be upset about it? Just say, no, thank you. Have a nice day. That's all you need to do. Move along, because if your house is worth $1 million, someone eventually is going to pay for it or close to it. So, as a buyer, keep these things in mind. It is a great time. Make the offer. If you think the market's going to come down another 10%, then make an offer 10% less. Here's the other thing. I've talked about this before. You know what's exciting about a market like this for buyers? And I'd love to have you call me, by the way. If you're a buyer, if you're thinking out there, give me a call, and I'm going to run you through some scenarios that are going to surprise you. I'm not going to go into detail here and give away all the secrets, but I could work with you to show you not only how to get a better price on that house, but how to get someone else to buy your interest rate down for you. If you're a buyer, if you're an interested buyer, if you're thinking about buying, give me a call, and I'll walk you through the process of not only strategically how to get a better price, but then how to get a record low interest rate at the same time, or potentially do one or the other in a transaction. Those are the kinds of things you could do right now. You want to be working with people that understand this market, people that work with it, and they know the parameters and the things you could do. The other piece, as a buyer, you've heard me talk about this before, but it's worth mentioning again and repeating. Don't be concerned if you have a home to sell. Don't let that hold you back from buying. In other words, if you have a home and you said, Joe, I'd love to go out and buy right now. I know it's a great buyer's market, but I got to sell my house. Well, yeah, maybe. But have you ever heard about a cross-collateral deal? Have you ever heard about leveraging, bridging? There's a lot of asset depletion. Have you ever heard about using assets to pledge assets? There's a lot of things I'm throwing out here. My point is there are strategies that I could help you put in place to go out and make an offer and purchase a house without selling your home if you don't want to. I really can. And I mean that. I know it's not for everybody, but this stuff's real. I help people. Just today I'm helping one other person do this very same thing. They have a condo probably worth $1 million. They only owe $300,000. They want to go buy something for $1.5. They said, Joe, we really don't want to sell our home right away. Perfect. Let me show you about this cross-collateral program. All you need to do is put 10% down. We'll finance 90% of the new purchase, and we're going to take care of this, and you could sell your home when you're ready. Cross-collateral loan. It's a deal that I've done many, many times, and there's some great programs out there. The reason I bring this up and repeat these things is that I want you, the buyers, if you're out there, to understand that there's options and opportunities. So don't think that just because you have a home, you have to sell the home. Of course, if that's what the plan is and you want to do that, there's nothing wrong with that. If you said, hey, listen, I don't care. I'm not going to buy a house until I sell my. That's fine too. even better. Right now, people are accepting contingent offers more than they ever have. So don't let that be a deterrent for you, is my point here. Don't let that be a deterrent if you have a home and you have to sell it, or you don't have to sell it, or maybe you don't want to sell it. We could talk about those things and help you. That's what we're here for. That's what we're here to do. If you're not quite sure who to work with, if you're not quite sure about your real estate agent, give me a call. I have great real estate agents to refer that I trust you could work with. If you're not quite sure about the lender you're working with, if you're not quite sure about whether they know about these types of programs or not, then I'm happy to help you or guide you in a different direction. Let me just say this, and this is an indictment kind of on our industry, and I'm saying our industry, it's an indictment both on lending and real estate. You're lucky if you find about 10% of the people that treat this like a business. Keep that in mind when you're searching for the right person, or if you're working with someone right now that's a lender and a real estate agent. Believe me, I don't say this to be negative. I don't say it to judge or badmouth as much as I do to make sure that you're working with someone that's going to do the best job for you. Those are the facts. These aren't my things I come up with, ladies and gentlemen. The facts are this: less than 10% of people do 90% of the business in our industry. Okay? I'm going to let that sink in. So every 10 real estate agents you meet, every 10 loan officers you meet, you're lucky if you find one that is going to know what they're doing, truly know what they're doing, treat it like a business, and guide you through the process the way you should. It's just the truth. It's going to happen. Those are the statistics. That's not something I came up with. Those are real. The reason I continue to bring this up is that you don't want to get yourself in a situation where you're partnering with someone and you're making some of these large financial decisions and not have the right people representing you. You just don't want to do that. It's not worth it. You don't want to put yourself in that position. So before I sign off today, again, quick reminder, rates have dropped really low right now. They're in a great spot. They're not record lows, but they're certainly a lot lower than they have been in a long time. Take advantage if you can on a refinance. Maybe you need to remodel, consolidate a first and second, all kinds of reasons to do that. In general, if you have an interest rate of 4.5% or more, you could most likely benefit from a no-point, no-fee loan. Give me a call, check in, let me know. Secondly, just a quick summary. Great time to be a buyer. If you're thinking about it, you're on the fence, you're off the fence, you don't know if you want to go back into that crazy market, now's a great time. You have more inventory. A lot of these people that'll say, oh, well, don't do anything till after the Super Bowl. There's this, this is another thing that just really irritates me, and it's only because that's people's opinion. Don't list your house or don't make an offer, hold off till after the Super Bowl. No, nonsense. If it's right for you, do it now. List your house now if it makes sense for you. Buy a house now if it makes sense for you. There's some things statistically you want to look at and obviously you want to educate yourself on. But when it's time for you and it makes sense for you, do it based on your timing, not everybody else's, if it makes sense for you. So keep those things in mind. Great time to be a buyer. As always, if there's anything I could do for you, guide, conversation, consult, doesn't matter. Even if you're not working with me, if you want to pick my brain, if you want to have a conversation about some stuff you're going through right now, and you don't have to work with me. I'd love to work with you. But if I could help you or help guide you or give you some thoughts and some options and some opinions to think about, they're going to save you money or help you make wise decisions, and that's what I'm here to do. All right, thanks again for checking in today. This is Joe Cucchiara with Real Estate Radio Live. As always, go to 𝗪radiolive.com, 𝗪radiolive.com. You can call me, text me, 408-838-9060. Take care. Have a great afternoon.
You've been listening to Real Estate Radio Live. For more information on today's program, visit 𝗪radiolive.com. That's 𝗪radiolive.com. Subscribe to our podcast. Discover more at 𝗪radiolive.com.